Hey traders, it's Wellsmith here with another exciting bootcamp training today, Forex bootcamp training. I wanted to jump on here and discuss with you something that I think you find very interesting. ChatGPT. You guys probably are familiar with ChatGPT and asking its questions and so on and so forth. So I thought I would go ahead and ask ChatGPT the questions you see before you. But before we jump into the question, let me just invite you to subscribe to the channel and hit the bell button. That way you get notifications of future videos when I put them out there on Saturdays. So let's dive into the content real quick. If you find value in what you're about to learn today, please don't forget to give me a like and also share the video with your friends and colleagues and people that are in the same industry. So the question I wrote inside of ChatGPT is, if one wants to be a profitable trader, what is the 3 things he or she should master, right? So I'm going to put profitable Forex trader. Forex trader. What is the 3 things he or she should master? So let's see what ChatGPT has to say, okay? Excellent question, and one that separates gamblers from the true profession in Forex. To become a profitable Forex trader, there are 3 core areas you must master before anything else. Number 1, let's read this together. Alright, number 1, risk management. How profound. Risk management. Capital protection. Your first job as a trader is not to make money, it's to protect it. Why is it critical? Most traders fail not because their strategy is bad, but because they blow their account. Mastering risk management ensures you can survive long enough to become profitable. Key elements to master. Never risk more than 1 to 2% of your capital on a single trade. Use stop losses. Always. Learn position sizing, calculated lot size based on account equity and stop distance. Understand risk to reward ratio, R&R. Aim for at least a 1 to 2 or better. Accept that losses are part of the business, not a personal failure. Mindset. Think like a casino, small. Control bets with strategical edges over time. Number 2, trading psychology, emotional discipline. Trading is 10% strategy and 90% psychology. Why it is critical. Even the best strategy fails in the hands of an emotional trader. Fear, greed, and impatience destroy consistency. Key elements to master. Stick to your plan. No emotional decision making. Develop patience. Only take high profitable setups. Manage fear of missing out, FOMO. And revenge trading. Journal every trade, not just the results, but your emotions and thoughts during execution. Learn to trade with neutral emotions, not excitement or frustration. Mindset. Treat trading like a business, not a casino or hobby. And number 3. Number 3, strategy mastery. Technical and fundamental edge. Have a plan, then trade the plan. Why is it critical? You need a tested, repeatable system that aligns with your personality, time availability, and risk tolerance. Key elements to master. Choose a single trading style, e.g. a swing trader, day trader, scalping trading, swing, day, or scalping, and specialize. Learn market structure, trends, pullbacks, breakouts, and reversals. Master price action or a systematic strategy that fits you. Understand economic fundamentals, interest rates, inflation, and news events. Backtest and forward test your system before trading live. Mindset: focus on one proven setup until you can trade it in your sleep. So in summary, number 1, risk management. We're going to talk about that. Protect your capital. Number 2, trade psychology. Master your emotions. Number 3, strategy mastery. Trade a tested plan with consistency. Now, ChatGPT even goes as far as to ask if you would like, I can give you a step-by-step trading roadmap, like a 30-day or 90-day mastery plan, showing you how to develop these 3 skills in order. Would you like me to create that next? I'll probably talk about that next week, so if you tune into the channel next week, I'll reveal this portion of the continuation of what ChatGPT is recommending here. But what I want to do is do a deeper dive on every one of these elements. So the first element is risk management. Okay, so risk management. What is risk management? Basically, it's putting money into an account. Let's say 50, 100 bucks, 500, 1,000, and you're managing that money to the point where what you're actually trading with is not overly exposed to risk. Okay, so choosing the right lot size, using your risk calculator, determining what and when to enter the trade to maximize profits and to minimize losses. And always, like I said, use a stop loss. The stop loss will prevent the account from being blown. So many times in my past, before my learning what I've learned now and sharing it with you guys on YouTube, I would enter a trade without any stop losses, and then scratch my head when it actually went against me. And why did I lose money when I didn't have that much money to begin with? I would put in $250, and then all of a sudden, not even an hour within the trading, placing a few trades, I would lose that $250. And it's because I didn't set the proper risk management to help me protect my principal, my money. So I had to learn early on in my career that I had to master risk management. Okay. Now, it's important that you set a stop loss to prevent losses, a lot of losses. And understand that less is more, meaning that you don't have to take 200 trades. Okay. You could take 1 or 2 trades a day, 3 trades a day, but you have to find the A1 setups. I'm going to talk about that in future videos and so on and so forth. So patience is really, really, really important. And that falls into number 2, which is trade psychology. Trade psychology is about mastering the mindset of a trader. You will, the markets will tell you who you are, will reveal your true character. Are you a person that, gets excited when you actually win, or do you get frustrated when you lose? So you have to learn how to master the psychology of trading. Quail, your emotions, to not get emotional. I know it's hard to do, or it's hard not to do that, but to execute a plan is to not to get emotional at all. And you guys probably heard the old saying, there's no crying in baseball, right? Okay, you have to take the punches, you have to take the pain, you have to take the successes and the failures when you're a baseball player, of course. But that's just one analogy. But that's in life in general. There are going to be setbacks. There's going to be failure. But the true leader brushes themselves off, picks themselves up by the bootstraps and start again. Okay, I've lost many trades. I failed many challenges going forward. Just the other day I failed a challenge, and I couldn't quite comprehend why I failed the challenge. And then when I messaged the customer service rep inside of the challenge, they explained to me exactly what happened. And I was like, okay, now I understand. Okay, so which means that once you know what a failure is, you don't repeat that same mistake, right? You don't repeat that same failure. You just brush yourself off and start again. And I told him I'm going to be the #1 top, funded broker within the platform. And he's like, that's great to hear. This is exactly what we need to hear. People like you who are not going to give up when they fail. And I'm not going to give up. Keep on, keeping on, keeping on. Try. Perfect practice make perfect trades, right? So it's important to master psychology. It's going to require you to read a lot of psychology type trading books that'll help you, master your emotions. It's very important because that's when you really find out who you really are. If you're trading and you're frustrated, take a step back, reevaluate, come back tomorrow, trade again. Never trade when you're frustrated, angry, or upset. It doesn't work. Trust me, been there, done that. It's important that you go into your trading session. What I mean trading session is pick a time when you're going to trade. If it's going to be, the 9:30 New York session, Eastern Standard Time, then go into that trading session with a clear mindset. If you drink coffee in the morning, have a cup of coffee half hour before. If you drink water in the morning, have your cup of water in the morning. Whatever you do to calm your nerves, to prepare yourself for that trading session, it's important that you do that. If you exercise in the morning, you wake up early, and you analyze the charts before you actually place your trade, it's important that you're clear-eyed, you're refreshed, and your mind is clear. So you might want to get into, like me, I read scriptures. I read the Bible. I consult with my God to help me make the right decisions throughout my trading journey. All right, and then number 3 talks about strategy mastery. Trade a tested plan with consistency. How important is that? It's important to have a plan in place and you follow that plan. It's like a roadmap to your destination. Some of you probably been on vacation or traveled, in different areas, or even, going on an interview. You need to know where you're going in order to get there on time. You need to know what bus to take, what train to take, what route to take, as far as opening up a map, and you plot out where you need to be, right? So point A to point B, there are a route that you need to take to get there. So having a trading plan in place, that's your roadmap that you're going to follow to help you execute the right trades, to help you find those A1 setups. And then you're going to be patient. You're going to wait for the market to reveal itself. You're going to set traps. You're going to be the hunted, not the huntee. You set traps so that when the market falls into your trap, it becomes an A1 setup. You can execute your trade. You've calculated your risk, and you know what lot size you're going to trade going forward. And then you set your ratios. And it talks about knowing your ratios, 1 to 2, setting those ratios to a point where you set it and forget it. You put in the trade. You say, okay, this is where my stop loss is. This is where I enter, and this is where I exit. It's important that you do that. I didn't do that in the beginning of my trading journey. I would say, okay, I'm going to put in some money, push a couple of buttons. Okay, I made $10. Wow, this is easy. I'm going to be a millionaire, right? It doesn't work like that. It does not work like that. Because the minute you could make that $10, the next minute you could lose $20. So it's important that you have a strategy, a plan, a written, definable plan in place, and you follow that plan with consistency. When I say consistency, you do the same exact thing over and over and over and over again. You try not to, and I know it's hard, try not to go against your plan. You lose a trade, don't revenge trade. No, don't do that. Take a step back, you reevaluate, come back, whether it's within that trading session, if you see a setup, or the very next day. Okay, it's important that you set these rules and parameters around your career, because if you do not, you're going to find yourself being frustrated. You're going to find yourself losing a lot of money. You're going to be finding yourself asking yourself questions: is this truly for me? Do I really want to go through this pain? But if you can quail and manage your emotions, the pain side of, a failure, you can be very successful in this endeavor. Because who was it that said, I think it was Benjamin Franklin. He failed plenty of times trying to find, create the light bulb. And in his journey, he said, I failed over 1,000 times, but I found out that, and within those thousands of times that I failed, I knew that without going through all those failures, I would have never gotten to the point where I am today, where it's actually inventing electricity, light bulbs, and things of that nature. So I found 1,000 ways of how not to do it. So just like in trading, you're going to find different ways of not to do it. Trust me. The market's going to beat you up, eat you up, spit you out alive. I mean, it doesn't care who you are. It doesn't care what your background is, what race you are, where you grew up, what school you went to. It doesn't care about none of that. It doesn't even know you exist. When you're trading $1 billion market and you are a retail trader, you're a blip, a scheme of things, because you're trading with the banks, you're trading with financial institutions, you're trading against the market makers, okay? Because all these different factors are what you're trading against. And you always want to trade with a trend, not against a trend. It's important that you do that, okay? Because by going with the trend, it's like surfing, right? You wait for the wave to come, and you're surfing out there, and you're patiently waiting on your board for that wave to come, okay? That's where you're being tested. You're like, when is this wave ever going to show? Is it going to be a big wave, or is it going to be a small wave? But at least you're on your board waiting, right? That's why we go into the charts. We will wait to see if the wave is going to come, if the market makers are going to push the market high, if the banks are going to go in with blocks of orders and cause a big spike in the market. If the news, fundamental news, if the news is going to be positive to cause the market to, kangaroo tail and trade higher, right? If you don't know what kangaroo tail is, we'll look that up. Because if you could ever catch a kangaroo tail in the market and you're in the market while that happens, it'll 10x your initial trade, your initial investment. And you come out of that with so much capital, so much money, that it blows you away. But they're rare, very rare, and hard to come by. So if you got to learn fundamental analysis, you got to learn technical analysis, you got to learn how to, master your emotions. You got to learn how to control your risks through risk management. So these three important aspects of trading are important. And each one I had to teach myself these three important aspects to the point where I could now say I'm a lot better than I was in the beginning. Okay, because I understand risk management. Okay, I've quailed my emotions to where now I just walk away after I set a trade. Trust me, you don't want to be that person watching the trade once you put it in, because you start second guessing your trade. You start saying, should I move my stop loss? No, don't touch it. You start saying, should I close the trade now? I'm in profit. No, don't touch it. I mean, some people move their stop loss to break even. Okay, if the trade goes against them, they didn't make any money, they didn't lose any money. Okay, some people move their stop loss and secure, 20% of their profits. That if the market turns against them, they at least walked away with 20% of their investment. Right? Now, some people do 50%. That's called a trailing stop loss. Right? You move your stop loss as high as your profitable trade is. That stop loss is moved higher and higher and higher to secure the bag. Okay, so these are different things you'll learn along the way that'll help you in your trading journey as well, to help you become a master trader. Because to become a master of anything requires dedication, commitment, consistency, a strong belief in yourself, the aptitude of a champion. Because if you ever see a champion, you've seen many champions along in your lifetime. Those individuals, what do they always say? They ain't slept, drank it, right? They did everything in their power to master hitting the ball, throwing the ball, hitting golf ball, hitting a tennis ball, bowling. They had to spend reckless nights. Okay, they had to, sleep late, wake up early. Okay, they had to do the things that help them get to where they are. Okay, it takes 10,000 hours to become a professional. But once you become a professional and you become an expert at that profession, whatever career that you set your flag on, okay, that you want to be, hopefully it's trading, right? If you want to be a master trader, you gotta backtest, you gotta practice, you gotta create a trading plan, you gotta stick to your trading plan, you gotta put reckless nights, sleepless nights, analyzing the charts, understanding what's going on technically and fundamentally. Okay, you got to do these things. Okay, because once you master the skill, no one can take it away from you, and then you'll be able to see the chart or read the chart and say, okay, that's a pattern that's about to develop. I know exactly what kind of pattern that is. I'm going to wait for the pattern to fall into my trap. I'm going to enter the trade when it actually gets to my trap. And then write it to the point of profitability. Not every trade is going to be a profitable trade. Please understand. But if you can have more wins than losses, great things can happen. And that's called your win ratio. Okay. If you can create a 60%, a 70%, 75% win ratio, then you're ahead of the game. Which means you're winning 60% of the time. Okay, so if you have more profit blue days versus red days, then your ratio is positive. So that's what you really got to master. You got to master that. Okay, try to maintain 60, 70%, 75% win ratio, which means if you place 3 trades, you can only lose 1. Okay. And if you lose one, you take a step back, reevaluate, come back tomorrow. Okay? So minimize the amount of trades you place in a day as well. I'm trying to teach myself that. Trust me, I place too many trades in a day. Because I do this pretty much all day long. So I catch trades based on my trade strategy, but I want to, follow in my own mindset that less is more, and I want to place anywhere from 3 to 5 trades a day. That's it. I want to lock it in and keep it within the 5 trade a day ratio. But it also will require the trade lot size, right? The amount of money that I want to invest in the market. Because I find myself placing a lot of small little trades, and little trades add up to significant profit, but I want to be at a point where I can create, or maintain one lot size based on the size of the account, and manage that to a point where I'm consistently trading at one lot size, managing my risk, mastering my psychology, and following my trading plan. All that in a nutshell. So I encourage you to do the same exact thing. So if you're watching this and you say, this was great, ChatGPT gave a great breakdown, of what to focus on. And these are the 3 steps. I could have said, what are the 5 steps, to focus on? But I want to focus on 3. Then I wanted to talk to you a little bit about my journey within those 3. Okay, because risk management, I wish I knew that before I started trading. I would have never threw $250 in the market to lose $250 in the market. All right, I would have managed that to a point where I can scale it up, right? All right, each time. And I wish I knew the importance of trading psychology, mastering your thought process. Because it's one thing to trade a demo account because really there's no emotions, right? Because that's fake money. But there's another thing to trade real money because now you got skin in the game. Now you're like, wow, I want to make this, small investment, a small account. I want to grow it to thousands and thousands of dollars, right? So now your emotions are involved. But if you can quail it, if you wrap your arms around it and say, listen, don't get too excited and don't beat yourself up, because trading is about probabilities, right? You don't know if it's going to go up. You don't know if it's going to go down. You don't know if you're going to be successful. All you know is what you know based on statistical data. That's why we backtest. That's why we try to study what the candles are trying to communicate, because there's a book, Bible's, Candlestick Bible book. And you can listen to the audio version of that book on my YouTube channel. There's a PDF version of that same book. You can reach out to me. I can send you a copy of that book. So it's important that you understand that as well. Okay, what are the candles are saying? What is a doji? What is, bullish engulfing and bearish engulfing? These are telltale signs of, that we should be included in your trading plan to look out for. So when you see those particular candles develop, you know what direction the market's going. Okay, so yeah, it's all about, if you look at the summary again, those three things. Okay, and trading plan, believe you me, if I knew I had to create a trading plan in the beginning, I would have been a lot more successful in the beginning than I am now. Because the trading plan is the playbook of all playbooks. When two sport teams are competing to win, each team has a playbook. Okay, if it's football, they know what they're doing on every single down. First down, second down, third down, fourth down. Okay, each side has 4 chances, right, to get into the end zone. But each chance, this is a strategy to get closer and closer to the end zone. I use that analogy because, I like watching football every now and again. But I also grew up playing baseball. And in baseball, you had to sharpen your skills, okay? You had to put in those off the field training hours to get better. You had to learn how to throw. You had to learn how to swing. You had to learn how to run fast. You had to learn how to, be mindful of what's going on in the game, okay? Because each team has 3 outs, right? In baseball, and each team has a playbook, okay? There's 9 players on each side. The first batter, his goal should be to get on first base, right? Second batter, his goal is to move the first base guy to the second base. Whether it's bunting, right? If you're familiar with that, let me know in the comments. Bunting, where he inches that first baseman, to second base. Whether he gets on first base or not, his goal is to move that first baseman to second base. And then the third batter, his goal is to hit the ball, get a single, right, in the outfield to bring the second baseman to home plate. That way they can make a point. And the team that can master that on every inning will win the game. Okay? But in baseball, there's going to be strikeouts. There's going to be, outs, right? Out number 1, out number 2, out number 3, change sides. So the challenge there is to score before the third out. That way you can win the game at the end of the 9th inning, right? 9th inning of baseball. But I use that analogy because I played baseball growing up, okay? And I had to get really good at that sport to be even considered to be on a team. Simple as that. Simple as that. Okay? So, even though this is a career, a trading career for yourself, and you're thinking about, well, should I really engage myself in this? There is a lot of money that to be made in this career. Okay? But you have to take it seriously. Seriously, seriously, seriously. Because you have to be your own boss. Okay? Because the great thing about trading is you can set your own hours. You can trade when you want to trade. You can trade remotely. You can trade at home. You can trade at an office. You can trade at the library. You can trade at a coffee shop. You could trade at a park. Wherever Wi-Fi is available, you can place a trade. You could trade on your smartphone. Okay? You could trade on a laptop, on a desktop. You could trade on the tablet. Okay? So the opportunity is there, right? But you gotta master the skill set. Because once you master the skill set, you can write your own paycheck. Whether you want to make an extra $50 a day, extra $100 a day, an extra, $1,000 a day. Real quick, I had my first $4,000 profitable day last week. I was like so excited, you're really excited about making $4,000 in one day, but you try not to be not that much emotional. But I was jumping off the walls, right? Sometimes you have to for the first time, but then when you do it again, you're like, okay, the strategy is working, okay? Because the next following day I made $2,000, and then the next following day I made $2,000. So I was averaging out $2,000 a day. I was like, wow, okay, it's working, okay? Because now I understand, if I continue to, follow my trading plan, great things can happen, right? So, and the lot size has a lot to do with it, with risk management, money management, things of that nature. Because the same lot size that you place, let's say a 0.01, and you place a 100, those lot sizes, okay, can produce you money if you know when to enter the trade. Okay, so for example, I was watching one of the top traders online, and his lot size was 100. Okay, and he had 5 of them open based on his trading plan. And at the end of that trade, I kid you not, it floored me. He made $300,000. But you say, well, he had to have a large account. Yeah, he did have to have a large account to absorb the losses, because you have to go into the mindset of saying, hey, if I lose, I lose, right? This is how much I'm willing to lose. So, but he set a stop loss, he entered the trade, and he came out to the back end, $300,000 in profit. I was like, wow, it's incredible. Same thing as a person who put a 0.01 lot size, who comes out at the end of that and makes $1. Why do those two people make profit? It's because they had a trading plan, okay, and they executed that trading plan. Whether it's $1 or $300,000, if you have a winnable strategy and stick to one strategy, okay, a winnable strategy is no reason why you can't make the same type of income. Is it guaranteed income? No, it's never guaranteed income, because depending on how much time you spend studying, trading, back testing, testing your strategy over and again. So there is no, guarantee whatsoever. I have to say that for legal purposes, but there's no guarantee. Okay, the only guarantee there is that you don't make any money if you're not even in the trade. Look at lotto, you got to be in it to win it, right? How you expect to win $1 million if you never, got into bought the lotto ticket? So I say all that to say, I know this particular training was more about me talking to you guys about, the summary that you see in front of you. I typically do like a technical analysis breakdown on the markets, but today I just wanted to chat with you guys, video to video while you're watching this video, man to man to woman. If you're listening out there, I'll let you know that these are the things that you have to master. Okay, so this video is a little different, but I hope you guys got some value out of this video. If you did, give it a thumbs up, and again, share it with your friends and let them know that, hey, this is the stuff that we need to master, or I need to master, or, I need to teach others. So wherever you are in your journey, focus on these 3 things. It's really important. Okay, get a notebook, write out number one, and research number one. Watch different YouTube videos. Ask ChatGPT, what is risk management? It'll break it down for you. Number two, trading psychology. What books do I need to read to sharpen my psychology? And then go to my website, click on, recommended books, and get the book for yourself. And then, of course, number three, strategy. Trading plan, writing it out, do's and don'ts, what to avoid, what confluences you'll find. When you see certain things happen in the market, that's when you enter that, coincide with your trading plan. And then you just set and forget it, ride the wave, and hopefully that trade that you place will be a winning trade. Okay, so it's 50-50. You don't know if it's going to go up, down. All you know is what you know. And with confidence, you can enter a trade, okay, and execute that trade based on your trading strategy. All right, so with that being said, I want to thank you so much for watching or listening to this video. Rewatch it if you have to, okay? Rewind it. Watch it once a day. Get these things in your mind. That way you're prepared to execute your trades come Monday. Okay? So, have a great one. Enjoy your weekend. Okay? Come back next Saturday to learn more about how to become a master trader. Pretty much that's all I'm saying. Okay? Because once you become an expert at this, you can write your own ticket. You can make it as much money as you want, so on and so forth. Because you all seen experts in their craft. Mechanics, doctors, lawyers. These people had to go through a series of steps to get to where they're at. Through education, through testing, so on and so forth. Get their credentials, get their degrees, and so on and so forth. But once they came out of that tunnel, at the other side of that tunnel, they got the designation of being a doctor, a lawyer, a mechanic, whatever the case is. And now they're being sought after because people run to those individuals because they have the knowledge. Okay? They have the knowledge. Okay? The mechanic knows how to fix your car. You go to the mechanic. Okay? The lawyer knows how to win cases or file a lawsuit on your behalf or defend you because they have the knowledge. A doctor can pinpoint certain things that's going on in your health to help you improve your health. That's what you go to doctors. You get an ailment. You go to a professional. They say, hey, I feel this pain. What's going on? Let's run some tests and so on and so. Gives you a diagnosis, gives you a recommended plan, gives you medications. Because they went through what they went through to get to where they're at. No different from what you'll need to be doing. You put one foot in front of the other. If you want to become a master trader, then you just start learning this information every single day, hour, minute, every week, every month, every year. You make this part of your everyday life, and at the end of 1, 2, 3 years, great things can happen because you're knowledgeable, you become an expert, and all of a sudden you're becoming sought after because if you're making this type of income that you're projected to make based on the coming out there, the other end of this tunnel, other people will be like, can you teach me? How did you do it? Can you teach me? And then you're like, sure, I can teach you. If you're that type of person who likes to teach people, I can teach you. Sit down, let me show you exactly what I did. Okay? And follow my footsteps. That's what I always tell people. If you follow my footsteps, great things can happen. Follow the right cat, because we taught in school not to plagiarize others. Don't write, the same paper that such and such wrote. That's plagiarism. Right? It'll fail you. But in the trading world, if you follow the right trader and you implement the same exact trading strategy, no professor is going to tell you you're going to fail. Okay? Because if that person's winning, no reason why you can't win as well. All right? So with that being said, thanks so much for listening. Thanks so much for giving a thumbs up if you appreciate the content that you just heard. Please do that. But other than that, have a great one. Okay? This is, here's to your future. Here's to, a better lifestyle. Here's to, helping your family get out of whatever situation they're stuck in, because you're their back. you're their financier, you're retiring your family, you're retiring your parents, you're retiring your wife, you're retiring your husband, whatever type of person you are, people will definitely look up to you for great things. And hey, you'll be able to provide resources and support for whatever that needs to be taken care of. All right, y'all. Thanks for watching. Take care.